What's up, everybody? Welcome to another edition of Dave's Daily Dives, where I dig in the charts, taking a look at the macro indexes, the big stock indexes, see what they've done on the day, identify a few key levels, and then, just so I don't leave you hanging, at the end, I've got 5 Zacks Rank #1 strong buy stocks for you to take a look at, all of which are breaking out to new highs. So why don't we get started, as we do pretty much every time, unless something else spectacular happens, by looking at the S&P 500 here. So I'm on the spot index, or the cash index. So when you hear 2342.19, that's where the S&P 500 closed today. In the past, I've looked at the futures, but today we're looking at the cash index, okay? And as always, we're still built off of this fib from the November 4th, rather, lows to the March 1st highs, and draw in our fib retracement. So the most relevant of these has been the 23.6% fib retracement level at 2326. So that swing low there, and we can get the exact number here by using our Ninja Trader. So this is March 27th, 2017. We have an intraday low of 23.22 on the S&P 500. So that swing low is really what the market is keying in. That's the next sort of line in the sand. If we break down below that, that'll be a significant break probably of this 23.6% retracement level. So then we're talking the 38.2, which sits us down at 22.79 and change. As for today's action, another inside day, it looks like, here on the S&P 500. What that means is the entire range of today was within the previous trading days trading level, okay? So all of today's action was fully encompassed by yesterday's action. And we can see yesterday's low, 23.32, to the high, 23.49, and today the low, 23.34.54, with the high being 23.48.35. So frustrating day for traders, hoping that there would be some follow through on this bounce just near the lows. Now, if you notice, Friday's low, 23.28.95, dangerously close to that 23.22.25 level of March 27th. So the buyers stepped in yesterday, pushed this thing higher, but the bulls were really hoping for some follow through, at least break up above yesterday's high. That didn't happen today. So the stage is set for tomorrow. In the short term, keep your eyes on 23.49 on the S&P 500. If we break that, then the bulls will be in control in the short run. If not, look out. Maybe the bears again. And speaking of the bears, let's take a look at the volatility index, the SIBO volatility index. This has been historically very low over the last several months, and I can go back further. And typically you want to see a VIX over 20, and we've been in the 10s, 11s, 12s, very low teens for the most part. And you do get these spikes on occasion, but the last real spike we got prior to this last week, if you could call over 15 a spike, because really over 20 is much healthier when we're talking about the VIX, right? And even higher. But still, I guess beggars can't be choosers, and we did get a little bit of a spike here in the VIX. And a lot of this had to do with North Korea and U.S. missile launches over in Syria, and all sorts of stuff that the market really didn't have to price in up until very recently. So these are new worries that the market has. We never even worried about. So you had a little bit of a repricing of risk. Yesterday, the VIX sold off considerably. Today, it gave up a little bit of ground, even though the S&P 500 on the day down 29 bips. The Dow was off 0.5%, a little bit more than 0.5%, and the NASDAQ was down 12 bips. So even while equities sold off, the VIX actually crept up a little bit. The VIX came down a little bit also, right? So that's interesting to see when you're talking in terms of this sort of, risk-off trade that we were seeing. Now, globally in terms of risk-off, I talked a lot about the Japanese yen because this is sort of the global reserve currency, as you will. So when you see the yen appreciate, that is a risk-off trade. Again, today, we saw more of the same. Of course, this is the dollar versus the yen, okay? US dollar versus Japanese yen. So higher values here mean a stronger US dollar and a weaker yen. Opposite is true on the downside. So when you see a down day or a red candle in this instance, that is a rally in the yen. So it didn't quite take out yesterday's lows, but still, yen still on the move, has broken down below this 50% fib retracement of the election day, well, pre-election day, really. I mean, this started the end of September to the highs of mid-December, and then the yen has been strengthening since then, broken through the 50% level. Now, keep your eyes on 107.22 as the next support level for the dollar versus the yen on this slide for the US dollar and this increase in strength in the Japanese yen. One other place you want to look for weakness and or strength is in the Russell 2000 index. This is the small cap index that was the epicenter of the Trump trade. You can see that Trump's election, get some more details here. Trump's election, the lows 1156, and since then a huge rally up into early December, up over 1392, some consolidation, a little bit of a spike up, kind of a rope-a-dope. Looked like we were going to break out through the top, didn't happen, got pulled right back down, and again, March 27th lows. Mark this for yourself. 1335 as the low on the Russell here. That's the March 27th low. And the highs got to make you a little bit nervous here. There's a high, lower high, lower high, lower high, consistently putting in lower highs here on the Russell. And the last lower high happened to be right at the 50-day moving average, which now is going to sit right around 1376. Okay, so look for 1376, 1377 to be resistance on the Russell should it rally. So a little bit of follow through here that you didn't see on the S&P 500. So that's important to note that the small caps did a little better, but it's interesting to see that small caps are doing a little better while there's risk off in other parts of the market. So if you're going to draw your lines in the sand here, 1335 to the downside, 1377 here. Because if this breaks out, this could be a nice little move and indicative of a change in the short-term trend. You can see that develop multiple times where you have sort of this downward channel that's been developing, and then it gets broken to the upside, right? So we've got a lot of negativity to downside, and then boom, it just kind of breaks out, and then it's over, right? It's off to the races. So we're starting to see that happen again here as we have a little bit of negativity in the market, this sort of downward channel that's developing. I'm sure I can make this look a lot nicer, but this downward channel that's starting to develop here on the Russell, and then if that gets challenged to the upside and you break out, then you could have a little bit of a relief rally. In that relief rally, we would see a lot of things. I would hope to see some dollar strength. I would also like to see that coupled with interest rates giving away a little bit, and the rest of the market risk on really going full strength. All right, so that's the first part of Dave's Daily Dive. Now let's go ahead and get into a couple of these stocks. Now, a few of these I am not going to be able to pronounce because this in particular is a Chilean beverage company. So the ticker is CCU. So Compania Cervecerias Unidas, right? That sounded pretty good, pretty close. I'll take it. A Chilean or Argentinian, South American, basically beverage distributor. They do alcoholic beverages. They also do non-alcoholic beverages. But I think there's a tilt towards the alcoholic side on these guys. So who would have thunk that a South American beverage company would be killing it out of the gate in 2017, but that's exactly what we've seen here. Coming out of the lows in early January, it's been no stopping it. The 50-day moving average has provided some support here throughout this ride. Right now, you've got a commodity channel index that's a little bit overcooked here at 212 and change. And you see basically the last time this crossed over the zero line was in March when the stock pulled back towards 23 before breaking higher again. So this one's a little hot to handle. I think I'd be more comfortable playing a little bit of a pullback. How far will it pull back? You can use your fib level here from that March low I was talking about, or the March consolidation period rather, and maybe you're a little bit more comfortable getting in at the 38.2% retracement around 26.62. Maybe even wait for 25 and change here. By that time, that commodity channel index should cool off. The other thing you wait for is the CCI just to kind of get down to the zero line. But right now, this is a very, very hot stock, so proceed with caution. Now, the other one's very easy for me to pronounce. Computer Sciences Corp, ticker CSC. So they're one of the largest sort of IT consulting, software developing, computer systems integration companies that's out there right now. They've had a pretty nice move that started before Election Day, but got reinforced on Election Day with the shares right around 51. A big bump higher here in early February, but the stock did pull back a little bit. Just got within this little, I believe this is a post-earnings gap, just got within that gap just a little bit, found some support, and then now has been pushing higher. New 52-week highs, but that got rejected. And if you look here, I have this horizontal histogram. This is a volume at price indicator that shows me where a lot of the activity's been, and there was some strong volume there rejecting that $70 level. So that might be a little bit tough. Maybe you want to wait for a bit of a retrace back to the lower 60s before you jump on board here, but definitely one to have on your radar here, Computer Systems Corp. And again, all of these are Zacks Rank #1 strong buy stocks that are breaking out to new highs. Then we have Maztec. So they're an infrastructure construction company based here in the US, actually very close to where I am here in sunny Miami. And if you see, this has been a nice, slower kind of consolidation, bid higher, which I like. So you see that the buyers have come in and really propped this thing up over the course of the last several months. You've got a nice little resistance level that had been priced in there, but this resistance here looks like it's starting to break down, and the stock could be going higher. Again, you have this thick band of volume that's now providing support to the downside. If you're looking for one of these stocks that's actually the most relevant, the easiest one to get into, I believe this is the easiest one to get into right now, because you can put your stops just below the $40 level, maybe even just below the swing low of April 12th. So that puts you in the 39.5, somewhere around there. Nice little risk versus reward. You can buy that, close your eyes, and hope that it goes higher. Again, the 50-day moving average providing support down here at 39.22. That's Maztec, ticker MTZ. Then we've got Ollie's Bargain Outlet. So they are a retailer of brand name merchandise and housewares, food products, stationery products, bed and bath products, all sorts of things. And they've been on a more of a steady sort of incline also. You like to see this as it comes back, and it's recently found support at this 50-day on multiple occasions. Kind of whipsawed back and forth above it for a while there, but recently it's definitely found some support here. That sits down there at 32.42, and another situation where you have this wick that's gone higher, still haven't gotten above that wick. But you do have this recent pullback to the zero line on the commodity channel index, which was met with buying. So I think this could continue to break higher. And again, you could put your stops below the 50-day moving average on this one. So it's going to end up being a little bit more than 10%. Maybe you wait for a slight little pullback on this one so you could buy it. That's Ollie's Bargain Outlet, ticker OLLI. Okay, everybody, so that's all I got for you on Dave's Daily Dive here. We got a few stock ideas that you can take a look at that I think are going to do just fine. And as always, if you're not already following me on Twitter, look at this dashing fellow, Dave Bartosiak. That's at Bartosiastics, BARTOSIASTICS. Go ahead and check me out I post all sorts of fantastic things, like me on Bloomberg, me goofing about the Cubs, me not shaving, all types of fun stuff. You can learn about the S&P 500, how that moves, learn about Chinese real estate, and of course I post about the Cubs and Ferraris all the time. So check me out on Twitter there. And as always, I'll be back tomorrow for another edition of Dave's Daily Dives. Have a good one. See you all then.